This is our Forex blog for April 27th, 2011. And like most days, we want to buy the strongest currencies and sell the weakest ones. You can see last night the euro was strong and the daily, weekly, monthly trend was up. Same thing with the Australian. The dollar is one of the weakest currencies. The daily, weekly, monthly trend's down. And obviously, as you can see, yesterday extremely weak. A little bit of weakness here, here, and here. The yen last night was more consistently weak than the dollar. So the euro yen is a good one to buy. Australian yen. Let's start with the euro yen. And you can see the price is above the hourly moving average. Yesterday's, okay, never mind, take that back. The price is just kind of going sideways. We have a slight breakout to the upside. That's always a sign of strength. Last night before midnight, you can use your tick charts to buy the next pullback here. Let's put this in here and scroll back and take a look at what it looks like on a tick chart right before midnight. You can see it pulled back to the hourly moving average right here. That's usually a decent place to buy a pullback. And it's always best to wait for kind of like a little mini double bottom on a tick chart. You go long right here, and you can see it shot up about 15 pips. Very high participation. All the euro pairs are going up on all the tick charts, and the yen pairs are going down. You might have got out of half your trade here when it pulled back a little bit, tightened your stop. And a lot of times fibs even work on tick charts. You know, it comes really close to the fib target. You have a monthly or weekly pivot level right here, and when that turns red, you get out of your trade. You wait for the pullback, and it's always best after a pullback to see a little bit of a sideways action with it not going down. And when it breaks out again, you get in. You got a little bit of red here on our FX Scalper Pro, so that's always a good time to move your stop from underneath the lows to underneath here. And you're always expecting the previous swing high to be kind of an area of it stalling. So when it came up here and came back down, you would have got out of half your trade there for about 14 pips. Move your stop up. Oops, hold on a second. Move your stop up underneath this swing low. And again, usually fib targets off of the last wave, which in this case was a two-part wave. And notice where it went, right to the fib target stalled and to the pip at the 1.618. So whether you got out of the second half of your trade here or a little bit later when it hit the fib target, good place to get out. And FX Scalper is an excellent tool for, as this thing's going up. There's not a super high percentage of them, going up. So that's a great place to get out of your trade. During that pullback, notice there's even a smaller percentage of euro pairs going down, yen pairs getting stronger than during the previous mediocre percentage participation up move. So when you get into that trade here, notice almost every euro pairs going up against other tick charts. This is the fastest statistical trend tool we have, and you might have bought this thing at 80. You can see it went all the way up to 95. Great way of scalping. And again, another pullback here, and if went sideways, you usually want to buy a breakout of that level. You might have got into that trade here. Notice the extreme weakness, obviously, and if you got into that trade and you saw no strength, you're going to bail. You're going to lose 5 or 6 pips, sometimes 3 or 4, when trades don't work out. That's just, how you use the tick charts. They are designed to keep your losses super small. Again, the Australian was very strong last night. The yen was the weakest. So the Australian yen also was a good one to look for buys. This one also came back down and found support right here at the hourly moving average. Let's look at this one a little bit later. It finally exploded up. Let's say you missed the first, move up into today's trading session. Let's say you started trading, closer to midnight. You missed the last, night's move up. You get a nice little pullback, and what if you went long right here? Well, first of all, on the way down, almost every Australian pair was weak. Yen pairs were strong. In terms of them moving down. This doesn't show statistically how much momentum is moving, but on a tick chart, pretty much all the Australian pairs were inching their way down. And so if you went long right there, And guess what? As this thing goes sideways, notice it had a little bit of strength. The strength all but disappeared. You know, if you had a stop underneath the lows there, you might have moved it up to here and you lost almost nothing. You know, 4 or 5 pips. And so when it pulled back, or maybe 6, when it pulled back again and kind of went sideways and broke out, notice the weakness now is less than before. And when you're in, you got green, it's going up, it's kind of going sideways right here. You know, I would have probably exited half the trade there with 15 pips. Move your stop up underneath this low here. And then, you know, later on, it kind of works its way up. If you notice, you know, moves up with more intensity than, or more pairs participating than the ones down, you know, you tighten your stop. And as we scroll into today, currency meter showed the yen having weakness and the Australian strength. You know, you could have got out of your trade here and then bought this little breakout right here. Maybe got out of that trade with a few pips. And notice as it's up here near the highs, there's a smaller percentage of Australian pairs going up than before. And usually, you know, that's a big sign. It's at the previous week's high up there. Tighten your stop at the very minimum. You know, the market pulled back. Now let's say you wanted to buy this next pullback right here. Notice, you know, the colors of the bars are red. They go green. If you're an aggressive trader, you might go long the first second it turns green. Or if it kind of goes up, pulls back, you see less percentage of them going down than they were going down before. Adds to your probability. You know, you go long again right here. A lot of times these things stop up at the previous high, and as it's going up, the percentage of them going participating goes down, so it's losing some strength. You might get out of your trade there with a small profit. The FX Scalper Pro is designed for people that want to scalp. Usually scalpers are trading, you know, no less than one lot, and you know, sometimes 10 to 30 full lots at a time. So 5 pips with 10 lots is $500. So, you know, never sneeze at a 5 pip move, especially if you're a scalper with a bigger account. You know, off and on strength and weakness today. The longer term trend was down. We prefer to see some weakness come in, you know, when the daily, weekly, monthly trend is down. You know, the pound had off the chart strength at about 530. The yen was consistently weak. You might have traded the pound yen at this time, and you can see this thing just absolutely exploded up about 200 pips. And again, when markets volatility go through the roof like this, tick charts are phenomenal for helping you, you know, scalp or catch 20-30 pip moves. All right, so here it started to shoot up, right, and it became extremely strong right here. Notice on the tick chart, a little sideways action move, you got in, and every pound pair is going up, yen pair is going down. You know, and then during this little pullback right here, there's almost no weakness. You know, when you see the pound on the currency meter at 100, it's the strongest currency. So just every time it makes a higher high and has a little tiny pullback like this, and you see almost no weakness compared to the strength, just tighten your stop, you know. And obviously when it gets above the upper containment band, usually price stalls and reverses. So I'm going to draw my fibs on this first wave up, and when it hits the 1.382 fib target, you can see it almost, you know, almost to within a pip stalled at there. I would have got out of my whole trade here at 136, but you're in it at 135 and caught a 100 pip move. And if you missed the first move, you know, obviously most people would have. A little sideways action here got in, or a little sideways action here got in. Even if you bought right here at 26 and out at 53, you made 20 pips. And then the longer it goes sideways, the better, especially when you see extreme, you know, near 100 green and less red. Obviously there's almost no weakness right here, so when it breaks out you have good odds. Notice it went right to the fib target. Even if you took this last trade on a scalping basis, in at 60 out at the whole number, you made 40 pips there in a very short amount of time, 5-10 minutes. Now even if you want to, and I don't rarely ever do this myself, but the strongest pairs like this sometimes can run 20, 30, or even 50 or 80 pips above the upper containment band. If you're going to take a trade like this, a little 20 pip pullback, notice the weakness kind of fell off before it went strong. Bars are green right here, you know, and you're still in, up until this point, still in the trade. All right, and you're out of your trade here at 27. It's a 27 pip move, even when it's way above the upper containment band. So for scalpers, the FX Scalping Pro is a phenomenal tool. I don't show it in class that much, but most of our traders use it, and use it for increased timing accuracy. On a scalping chart, a lot of times your stops are 4, 5, 6 pips, and you can still catch the 20, 30 pip wins. So, you know, if you catch 30 pips while risking 5, you have a 6 times bigger win than loss. You don't even have to be, you know, even near 50% winning with those kind of win-loss ratios, which is why our, you know, most active traders use these to increase their timing.